was a little bit under the weather. That's why I held off on this video until today, but we are doing it. We're going to get a lot of information out here. Merry Christmas and happy holidays to everybody. So we're going to go through all the major indices, check it out from the monthly perspective. We only have a few days left. And I want to show a perspective. I know that everybody's bullish. Everything is happy and everything else is awesome, but we did have our I called this can't count bears out because we had our reversal candlestick pattern on the monthly and all of them basically look the same, and it's not negated till we get a close up above those candles there. So this next candle has to close above. It has not yet. Very similar to this one. You know, you can go above it, but you need to close above in order to negate that that reversal candle. So I don't think that we're going to have this Corona crash type thing. I just want to show an example of where the price did not close above to negate that reversal candle. Okay, so here we go on a monthly time frame with SPX. We have this reversal type candle to the north side, looking bullish so far, but not closing above here yet. Now we only have a couple days left, so we'll have to monitor that and check that out as we go. And by the way, hit that notification button if you haven't already, just so you can get these videos and you'll know when to get them. Okay, so we're still looking for the end of wave 3 on the intermediate term. 1, 2, 3. Has it topped out yet? This is looking awful bear flaggish. I know that's very awkward bear flag, but to me, my perspective, it still is a consolidation formation, no doubt about that. And others could say it's an ascending triangle. Well, an ascending triangle going into resistance, in my opinion, but I do believe we had our reversal, and we're making some sort of flag there. We have the momentum waning. We have not crossed back over to the bull side yet. And if we do make new highs, we will also have another divergent high there. So, we'll flip our thoughts as soon as we have a close above, starting with the daily and then onto the weekly and then the monthly. If we close above that last highs, then we have to change our thought pattern. But that nice big reversal off the 20-day moving average and regain the 8, but still moving sideways. Going over to the daily, trend is our friend. And I have not changed my position on what we think. Still, I think we in and out the intermediate wave 3, and we're working on a wave 4. A, expanded B, and then we'll look for some sort of either 1, 2, 3, 4, 5, all the way down, or on a smaller scale that we ended our wave 3 up here, and this is an A, B, and we're looking for a 5-wave move down, a smaller one. But either way, we should still get an impulsive wave down if this is bearish, and it should happen really, really soon, Monday or Tuesday, if that is to happen. We're back testing this trend line here. Didn't quite close over it. Did get over that resistance, but so what would this be? This is A, and this would be a expanding flat for a B, where we had a A, B, C, and that would be a 3-wave move up, 3-wave move down, and an impulsive 5-wave move up. And then we should be expecting a pretty big move down to at least this rising pivot here. All right. We're not going to go down to the 65. We're going to keep this on the higher time frames. And I just want to show you that most of these indices look the same. So we're going to do QQQ and then IWM. Same thing. Had our topping pattern. We have not negated that yet. QQQ is a little bit weaker than SPX, so we're inside week or inside month so far, but we are bullish all over all the moving averages, and on the monthly MACD and RSI were overbought territory. So yeah, we can move sideways. We could still move higher. It's possible, but we do have a reversal candle. And until that's negated, I'm gonna probably stick around for that bearish events, but note that we will be hedged to the upside with some bullish individual names. Okay, going to the weekly. Same thing with this weekly time frame. We're holding that channel here, but really looking like a bearish flag. But this one looks a little bit better. We're in that tight range, had our reversal engulfing candle, and now we're in a range. And really, this is the candle that we have to look for in order to negate this this reversal here. Excuse me one second. I'll just go ahead and edit that out, you guys. Nope, actually I won't. And on the daily, all right. In the daily time frame, you see the channel that we're in. Again, that's awfully bear flaggish to me. We're right at resistance here, so we could start to move down. This would be more of an A, B, and a running flat. So you see that they both have the flat pattern, but this one's a running flat. It's more bearish. The A, and then the so a three-wave move down, three-wave move sideways, but this is a on this flat, this would be a three-wave move up, three-wave move down, expanding past the lows, and then three-wave move or five-wave move, impulsive move to the upside for the A, B, C. And so this could go a little bit further. It could be an expanding if it goes up further than the highs here at this level, but right now it's a running. If it reverses here, that's a running flat, and we should get that reversal here. So maybe we're looking for a pause candle on Monday, and then some movement for reversal, or we just start going down Monday. So we should know pretty soon if we're going to be bearish. If we just keep moving to the upside, then this is something else that's happening, and we'll have to rethink our thoughts on that. So still hadn't crossed over on the MACD. I still, in overall, just looking at the size of these moves here, it's just not likely that this consolidation or correction is over yet to me. It's we've seen a huge move to the upside for wave 1, 2, and working on wave 3. Is this 3 actually over? If the 3 is over, then we should see a nice big correction to coincide with these moves here. We just really haven't seen anything, so I don't consider that a huge correction. That's just a lower time frame correction. But being this a megaphone, this could be a nice large correction here. So if we get that nice 5-wave move down, I would imagine that would be a good sign that wave 4 is in, and then we have a good amount of wave 5 left to go to the upside. Now, same thing on IWM, and then we'll end it there. I don't have much more to offer. I will for the Patreons put out something tomorrow morning for the rest of the video, but right now I just want to look at the major things that says that we're still in a topping pattern. Okay, and this is a lot more obvious. We had a huge reversal candle here, and much more bearish than even the Qs, and held the 8 EMA so far, but still it really needs to do some work to negate that reversal candle there. So we'll see how this plays out, and haven't crossed over on the MACD yet, but definitely looking to do so. Let's go over to the weekly, get that perspective. And had that fake break all the way down, and I was back testing these major averages here. We're right at it, so I just expect a reversal if we're going to do it really, really soon. And I'll show you on the daily. You saw that the weekly momentum is down, but the daily's trying to curl back up. I do think that's going to be a fake out there, a whipsaw. But it looks like we had a 5-wave move down. We have a 1, 2, 3, 4, 5, and now an expanding flat, which is an A, B, expanded B. I'm sorry, a running flat, And now if we don't move any further, that should be a running flat there for reverse soon here. But just know that after this initial 5-wave move down, we did have a 50% retracement off that initial move up. And that's completely valid for now a possible 1 impulsive wave, 2, and as soon as this flat's over, and then a larger impulsive wave down for wave 3. So this the IWM looks much more bearish and than the rest of the indices, and should lead us on the way down. But we'll just have to see. We'll play it day by day. And the VIX is still in contango, which just means that the front month is shows less volatility than the back month coming through. So we do expect some more volatility in the future. It's kind of a warning sign. With the SPY, we can look at that volume on this move up. I know I said I was going to leave that, but you see this volume. I know that it's a holiday week, but no volume on the way up. Huge moves on light volume. Price is an arbiter, so obviously price does what it wants, and that's how you make money. But yeah, no confirmation there. And then last but not least, the SPX on the options expected move for the week. And you can see with these expected moves that we've really had a sideways range. I know that we had a larger move down where volatility expanded quickly, and I think that was just a warning shot. Volatility tightened right back up, and so we're expecting a 72-point move either to the upside or downside at this point. If you saw that last week, we started off, we opened and then came right down to the lower end of the expected move, and then visited the upper end and exceeded it. So, just look for much more volatility. I think we're going to get more than 72 points to the upside or downside. I think we're, without being too obvious, I think we're going to come down pretty hard if we're bearish. And then if we're to the bullish side, we should creep to the upside and probably hit that upper range. But throw on hedges and make sure that you're safe trading. And I like to throw butterflies on the upper edge if I'm bearish to the downside, just to hedge. And that's what I do. So you guys, thanks for joining us here at Options Center. Once again, happy holidays. We will talk to you soon.